What is going on, investors? Hopefully you guys are doing well out there. That is right. It is the weekend. It's time to have a little fun, and it's time for the FAANG Stock Recap Show here on the Investor Channel, where every Friday we recap all the major news and the technical chart patterns from all the major FAANG stocks. And over the past 2 weeks, we've had all of these companies outside of NVIDIA report their earnings, and none greater than the stock that we kick things off with every single week, and that's Meta Platforms. This company started the week at $398 and some change, and ba-boom, up 20%. To finish the week, close to $475 per share. Folks, it was 2 years ago to the day, February 2nd, 2022, this company saw its shares decline 20% in a day. This year, much different story. That's because their Q4 earnings came well above expectations, growing 25% growth on that top line. We'll talk about this when we talk about Google. Like, where the heck is Google? I know they had pretty decent top line growth, but it wasn't anywhere near 25% growth. I tell you what, this has got to be bullish for some of the other online advertisers, the Pinterest, the Snapchats out there as well. Otherwise, Meta is just gobbling up a bunch of market share. They beat expectations by nearly $1 billion. We're burying the lead because the company now has a quarterly dividend. And talk about a company that's not only a growth stock, but now you probably got dividend growth. They started that dividend at 50 cents. I tell you what, this company could easily double that next year, but at least give you a 10-15% growth, probably for the next 5 to 10 years on that dividend. And they initiated an additional $50 billion to the buyback. I tell you what, company surprised to the upside, the guidance surprised to the upside. They surprised with the dividend. They raised the buyback. They did everything they needed to do over at Meta, and shareholders rewarded them. Moving on to Apple, started the week at $191.71. Shares of the iPhone maker slipping about 3% this week to finish the week at $185.85, a little Ocho Cinco action there. Now, the company reported their earnings yesterday on February 1st. Revenues growing just 2.1% growth, and that's kind of what we talked about on the earnings videos, and you want to go back and look at those. I had to post the last two, Meta and Apple, a little bit later than I normally do in the day. But for the most part with Apple, what we're wondering is what gets us excited about Apple in the next couple of quarters, and maybe even the next couple of years, outside of a refresh on an iPhone, refresh on the earbuds, maybe a new Mac. There's not a lot. And then when you look at the Vision Pro, it's an amazing device. I think if I had one on, I'd be really excited about it. But what I wouldn't be excited about is looking at my credit card bill after I heard on the radio today, after some add-ons, after tax and add-ons, you're up over $4,600 for this device. The amount of people that can afford a $4,600 headset is just minuscule in society. I tell you what, if you can afford that type of item, you are doing really well for yourself. I'm certainly not one of those people. Now, Apple beats Samsung, though, to overtake the #1 spot in the global smartphone market. And nobody is going to contend, and nobody's going to argue that Apple doesn't make a great product on the phone. The question is, though, what do you get excited about in the future? Moving on to Amazon, started the week at $159 and some change. This stock also skyrocketing, up over 7.8%. The company reported their earnings yesterday as well. Revenue came in at $170 billion. And this is one of the reasons why we've constantly been, in fact, I don't think I've ever turned bearish on Amazon for the history of the program, and it's because they have so much revenue. When you have this much revenue, there's so many levers you can pull from a cost-cutting perspective to generate more profits, and we're finally seeing that with Amazon. They're doing a nice job controlling costs, controlling expenses, and it has rewarded the company from a share price perspective and evaluation. Amazon has overtaken Alphabet, and I think if everything goes perfectly for Amazon, which is obviously very difficult, like an athletic environment, it's like having a perfect game or throwing 5 touchdown passes in a single game or something like that. Amazon would have to have that kind of perfect performance, or shooting 59 in golf. It's possible, and if they do that, I think they overtake Apple this year in terms of market cap. Jeff Bezos, though, he ain't waiting around, guys. He got a new little side piece, and he plans on selling up to $8.6 billion. So look at how she looks at him in this picture, man. $8.6 billion, you better have a honey that's looking at you like that. But Bezos looking to cash out as shares of Amazon have completely skyrocketed. Now, Amazon's introducing Rufus, which is, I guess, your answer to maybe like Copilot, and everybody's like Bard, everybody's naming their Copilot or AI device something. But basically, this is AI embedded inside of Amazon's app. It's going to be rolled out to a limited number of users initially, but eventually, probably everybody's going to be seeing this. So you're going to be able to ask it things like, like, hey, what's the best toy for a 5-year-old or something like that. And look, if you don't know what to buy your 5-year-old, then you probably should be spending more time with them. Moving on to Netflix. Start of the week at $5.68 and some change. This stock sliding sideways. End of the week basically flat. Not a lose out of Netflix. Moving on to NVIDIA. Start of the week at $6.14. Company didn't do anything this week, and it was up 7.75% to finish the week at $6.61. Like, nobody sells NVIDIA stock. That's what I'm convinced of. Like, nobody ever sells shares of NVIDIA because it just continues to go up. Now, it's AI chip for the China market to see a similar price to that of the Huawei product. I think that's how you say that. But this is good news for NVIDIA, right? If they were priced above the market or priced above competitors, probably wouldn't be a good thing, but considering it's a similar price, and my guess, not knowing enough about this Huawei device, my guess is NVIDIA's product is far superior. Not just from a hardware perspective, but probably from a software perspective as well. AMD reported their earnings this week, and it sunk as AI boost was not enough to overcome weakness in other areas of the company. Now, like a lot of companies, AMD fought back to end the week basically flat as analysts started chiming in saying that maybe potentially AMD was kind of sandbagging their AI number. We'll see how that plays out over the rest of the year. Moving on to Google, start of the week at 152.16 and moving in reverse. Shares of the search engine giant down about 6.4%, finished the week at 142 and some change. The company reported their earnings earlier this week. You saw overall revenue jump 13%, but compared to the 25% growth you saw over at Meta, not exactly blowing the doors off. Now, I understand Google's ad business, I think, is about twice the size of Facebook. So the fact that it's still growing at about 13%, very interesting. Also interesting is literally right across the street is Google's headquarters, so you can probably find me on the Google Maps. Moving on to Microsoft, start of the week at 405 and some change. Shares of the software giant basically flat. Finished the week at about 411. The company also reported their earnings earlier this week, revenue coming in at $62 billion, 17% growth and some change, beat expectations, everything looking great for Microsoft. Also, interestingly enough, their partnership with OpenAI looks like maybe one of the greatest bargains in the history of Wall Street, as the two companies are combining potentially to invest in a humanoid robot. That's also the reason why I'm in San Francisco. I was visiting a human robot, essentially, or kind of a robot startup, and tell you what, that space is so green. I was talking with the founder afterwards, and we both kind of noted, like, there's no Amazon of robotics, there's no Microsoft, there's no Google. It's an open playing field, and whoever can capture a lot of market share, there's probably a lot of revenue and profits to come. Microsoft and OpenAI would be a formidable competitor in that space. Moving on to Tesla, start of the week at 186 and some change. Shares of the EV maker basically flat on the week to finish the week close to $188 per share. The company is, quote, recalling 2.2 million vehicles, including the Cybertruck, on a brake warning light issue. But this is one of the regular software updates. If you own a Tesla, you're constantly, not constantly, but it feels like once every other week, you're asked to kind of update the software. It's not really that big of a deal. Chances are you're probably having your car parked for a little while, charging it up in your parking lot or your driveway, so not that big of a deal. Now, Elon Musk wants Tesla incorporated in Texas after the state of Delaware. I've got my stories kind of mixed up here, but Elon Musk had his pay package, which was $55 billion, which I remember when that got announced, everybody thought Elon Musk was insane. I think he had to get the market value of Tesla to like $650 billion, which I think at the time might have been more than like almost every car maker combined. So he had to get Tesla's market cap to an area where nobody thought it was possible, and he ended up doing that. And he got rewarded with a $55 billion pay package. And so, like, I'm not familiar enough with $55 billion pay packages, unfortunately, but somehow that can get voided in a Delaware court. And so Elon's obviously a little upset about that, as I would be. And now he wants to incorporate in the great state of Texas. we'll see how that goes. Now, Tesla staying under the radar in terms of regulators by keeping its partnership with CATL at arm's length. My understanding is CATL makes lithium-ion batteries for Tesla, and what Tesla is doing is they almost have full control over a factory that is, quote, owned by CATL, but it pretty much is operated by Tesla, and it's one way to maybe get these things done without regulators or even those EV credits getting pulled back. Now, Ford giving EV owners Tesla supercharger adapters. I don't think this is a bad thing for anybody involved, particularly Tesla shareholders. We've said it numerous times here on the channel that Tesla's greatest advantage over any other car maker is its supercharger network. Drive an EV for any length of time. Certainly if you buy one, you are going to find out that charging it at a Tesla supercharger is the preferred method. And if you buy a Ford, I welcome you to the supercharger network. Now, moving over to the technical segment of the show. S&P 500, way overextended. I'm sure we could pull up the RSI, the MACD, whatever you want, and it's going to show complete overextension. You are over the previous highs that we made all the way back here in 2021. We are expecting pullbacks on the S&P 500. Pullbacks in the S&P 500, probably anywhere south of 4,700, should be bought. Speaking of should be bought, Meta Platforms, I guess I can take off my fake green candle. I had to put one up. So we have a gap and a boom. That's like a rocket ship type of candle. You should get pullbacks in Meta back to the all-time highs, somewhere in the $400 range. Pullbacks in the $400 range is your first opportunity with Meta. For Apple, we're at a very critical level technically for Apple, or actually just above it. We're at 186. The critical level I see is right here in the 180 range. So we actually are pretty close. A decisive break into the 170s for Apple actually is good news if you want to buy shares, because a decisive break into 170s, I think, increases our odds of, obviously, retesting areas a little bit lower than that. It would break a technical pattern that's been in place really since January of 2023. Anytime you break technical patterns, sometimes the traders go hands off, or sometimes, I guess, if you want to short this stock, I guess you could. I don't got the balls to do that, but I think the buyers don't materialize incrementally. You got shot under 160, I think, with Apple here pretty soon. For Amazon, Jeff Bezos going to be happy looking at this stock chart. Also have kind of a gap and a shoot. Wouldn't look to acquire or accumulate shares of Amazon. You've had better opportunities. Pullbacks in Amazon, probably back to like the 150, 160 area. That should be purchased. Skipped over Netflix, also kind of gap and hover. This is probably what the pattern that you'll probably see out of Meta and Amazon is. You have this big gap after earnings, and then you kind of have this flagging period. Netflix should have pullbacks back to the top of the channel, but it's not going to be a deep one. Anything back in this channel that we've really more or less been in for a little while now, south of, we'll call it 500. If you want to invest in a streamer, that's your one. NVIDIA's chart, here's NVIDIA's chart. It's straight up in the air. And yeah, it's just straight up in the air. Moving on to Google. Nice breakout of this channel with Google, and then we kind of came back in it. We're sitting almost in the middle of the channel, which is actually where I would, like, if you're just dying to get into Google, I wouldn't blame you. Again, I'm down the street from Google's headquarters. If you look at their headquarters, you might not want to invest in them because you realize how much money they spent on the joint. I mean, it's unbelievable. I'll try to post some pictures to my Instagram or Twitter. Those links are down below tomorrow. But this is where I would, in the middle of channels. So the channel I'm talking about are these two green lines right here, and we're kind of channeling. When you get in the middle of them, I'm going to change this red line we'll change it to brown. When you get to the middle is actually when I start buying shares. Let's say I wanted 10 shares of Google. I would actually buy 2 here if, and it's a big if, and it is a likely if, shares of Google continue to walk further down. You buy 3, you buy 4, you buy 5. You finally hit the bottom of the tape down here. This is where you unload a clip and you set your stop loss somewhere here at about 120. So your average cost for Google probably sitting in the 125, 130 area. Your downside is $10 and your upside is retesting highs and maybe surpassing them up here at 160. So you're risking 10 to make 30 or 40. That's how the Google setup looks pretty darn good. It's not perfect, but it looks pretty darn good. Now, speaking of pretty darn good, Microsoft's chart is not quite as, well, it might be prettier than NVIDIA's. And that's saying a lot. Shares of Microsoft just continue to move higher. Tesla's in a different spot. We are still in, if you look at like the micro trend with Tesla, let me take that line off too, maybe even this one, and just let you focus in on that. We're making lower lows, lower highs. We are in a downtrend. The question with Tesla is, can you rebound here? If you're a trader, you're actually looking to play the bounce from here back to the top of the channel. I don't like to play that game. We're in a shorter term downtrend because the risk is you dump out the bottom on Tesla. You dump out the bottom on Tesla, you got all kinds of buying opportunities. Now, the buying opportunity could be a big window. It could start at 150 and go all the way down to 100. So just be prepared to dollar cost your average all the way down. But you got buying opportunities, I would assume, probably in the next few weeks as it relates to Tesla. Folks, that was the FAANG Stock recap show for Friday, February 2nd. I hope you all have a wonderful weekend, a safe one. I'll be back again next week. Good luck with your investments.